Hey traders, welcome to video 7 of the binaryoptions.net trading video series. We're continuing our look at chart patterns. In this video we are looking at head and shoulders. So a quick review of chart patterns. They're visual patterns that occur frequently in financial markets. They can be continuation or reversal patterns. They'll also sometimes appear as consolidations during a trend. If you watch the triangles and flags and pennant videos before this, those would be examples of consolidations, and they're also considered continuation patterns. It takes practice to spot chart patterns in real time. We'll discuss that a little bit as we look at the head and shoulders today. Seeing them in hindsight's great. That's how you practice. Go through historical charts, try to find these patterns, see how the price reacts to them once it breaks out, and then try to spot them in real time so you can start to trade them. Multiple types of chart patterns. Each one will be covered in a video. We've already covered a couple, and there's still a few more to cover in future videos. So the head and shoulders, these are typically topping or there can be bottoming or topping patterns. So they are reversal patterns, which means if there's an uptrend and you see a head and shoulders topping pattern, the indication is that if it breaks to the downside out of that pattern, that means the uptrend is over and a downtrend is likely beginning. A topping pattern is created by a high followed by a pullback, a higher high, a pullback, then a lower high. The visual is sort of, it looks like a mountaintop almost. A neckline is drawn connecting the low points, and we'll look at the significance of that. Bottoming pattern is created by a low, a pull up, a lower low, another pull up, then a higher low. So it's like an upside down mountain. And a neckline is drawn connecting the high points. The neckline is important because it gives us our entry for an upside breakout. When the price goes above the neckline, we're looking to buy, and we place a stop below the right shoulder. Target is the height of the head and shoulders pattern added to the breakout price. And when the price breaks the neckline to the downside, we're looking to go short, buy puts or exit longs if we happen to be in a long position. Place stop above the right shoulder, and target is the height of the pattern subtracted from the breakout price. There are usually some other entries other than the neckline. Simply depending on how the neckline's angled, it may not be the most effective entry. So we'll look at that in the examples shortly. As always, additional information on binaryoptions.net, trading articles, tutorials, resources, as well as places you can find free charts. I'm using freestockcharts.com today. So here we have a chart of the Euro USD. Just going to pull this out to show a bit bigger context. So we have this nice uptrend. As you can see, the price moves higher, pulls back, creates a new high, pulls back, creates a new high, pulls back, creates a new high, and that's where we start to see this pattern here. This is the most relevant part of the pattern on the right hand side because we pull back and we fail to make a new high. So this is a new something that hasn't occurred during this uptrend. So an uptrend is defined by higher highs, higher lows, which we're seeing here. And then when we get to this side, it stops doing it. So this is the point where you have to be able to see these things in real time. We have a drop, tries to go up, and then starts to drop again. So once this starts to drop again, we gotta be saying, okay, here's a possible head and shoulders pattern. How am I going to trade it? We create this neckline by connecting the lows of the pullbacks, and as we can see, once the price breaks through it, it continues to the downside. So this is a great example of a head and shoulders pattern. If you can see, we have this pop here, pop higher, which is the first shoulder, the head, and then the right shoulder. And as you can see, it's not we have a couple little shoulders in here. When you're actually trading, these aren't always perfect. When you draw them or see it in a textbook, it looks like this, where it's just everything moving in perfect harmony, but that's in the real market. This is more what they look like, a little bit more noise. But overall, as long as the pattern's there, generally it's typically good to trade. So as mentioned, once it breaks below the neckline, that is our entry. We would be looking to place a stop loss above the right shoulder. In this case, we have two little shoulders, so we could put it above the higher one or above the lower one. I personally would put it just above this lower one, because once it breaks out, we don't expect this to come back to this level. We expect it to continue to run to the downside. So I would place that there. The target for the pattern is the height of the pattern, and if it's breaking to the downside, we subtract the height of the pattern from the breakout. So as I mentioned in prior videos, instead of actually adding and subtracting all these numbers, I prefer just to grab a tool, a trend line tool, measure the height of the pattern, put one end on the breakout price, and wherever it finishes, that is our target. If you want to know the actual level so that you can set the orders, you can just grab your cross tool, or so you can see which level it's at and which level your stop is at, which level your entry's at. And as you can see, if you place it above the right shoulder, your reward's typically going to be about 2 to 1 relative to your risk, because our stop is based on only a portion of the pattern, while our stop's based on a portion of the pattern, while our target's based on the whole pattern. And let's look at a different one here. So here we have, and I chose this one on purpose. Again, it's a little bit ugly. When we're trading like these in real time, like I said, they're not always going to be picture perfect. So we have this strong move down. This would be our right shoulder. And then we have this head where it moves down, and you notice it doesn't come back as far as this former low. That's fine. We can still see there's a head and shoulders pattern here. So, when you're trading these things in real time, don't get too concerned about, oh, is this exactly perfect? If you can see that there is that head and shoulders structure and a potential bottom, in this case, taking place, that's what we want to trade. Looking at the right hand side of the pattern, we see that, where the market's moving lower here, it moves back up, pulls back. If this is a downtrend, it should make a new low. It doesn't, and it skyrockets. So that's what we're looking for. And let's just zoom in a bit here. So neckline here happens to be flat, simply because the retracements or pullbacks in here reached a similar level. So once it breaks those highs, we're looking to go long. Here there's sort of a fake out. If you went long on this bar, probably news related or something like that. It broke out, pulled back. If you had placed your stop just below that, probably still wouldn't have been stopped out, though. It came back to pretty much the same point and then rebounded higher. So again, this would be our stop. And our target, again, based off, we want to use the most relevant portion. So we don't want to use this. We could use this right shoulder as the high point, but you notice that'll make our target slightly bigger. And if you look at this, this mostly looks news related or something like that, whereas this section of the pattern is much more stable, probably a lot more traders involved in this. So we're going to use this portion, and I encourage that, like, for a few extra pips. Don't get greedy trying to maximize every trade. Take reasonable targets based on the most, I guess, rational price action, you could say. So this high to this low is more rational than this one was, simply because, like, if you look at this, this looks news related. It's a very big bar. So I would use this. Once again, set one end of the target on the breakout price. There. And that would be our target. Now, as you can see, on this particular case, we didn't quite reach our target. That's okay. I would encourage traders to watch their positions. You can, what they call, set and forget. Set your orders, set your stop and your target, and that's fine. I prefer to actually watch. If this gets within a few pips and then starts to move away, I'm just going to exit, take my profit, and be on my way. So I might have actually ended up getting out there or something once it just missed and started to move away. I'm not going to let this turn into a loss just because my target was missed by a couple pips. So that's a few lessons on actually trading these in real time. For one, they don't always need to be perfect. Two, as a general rule, if a price comes very close to my target, I'm looking to get out. I'm not greedy about letting this turn into a loss just because it didn't reach my target by 1 or 2 pips. So things to keep in mind. We're going to continue. We'll finish up with chart patterns in the next video, and following that we're going to look at some other stuff. So until then, happy trading.